Yup.
Let's do it.
Dynasty continues.
The legacy will never end. You got to unmute us.
Two. We're not muted.
What's going on? Okay. Greetings and salutations, everybody. Welcome back to the greatest show on earth, aka Market Mondays. It's been a crazy couple of weeks in the stock market.
Seatbelts on. Everybody got their seatbelt on.
Hope you guys are keeping your composure.
That's a fact.
Keep your composure.
Keep your composure. Act accordingly.
That's a fact. Keep your composure, man. It's extremely important.
Act accordingly.
What's up? We're going to let everybody get in here. And we're going to get this show on the road. That's it. Get in, get out. That's an OG classic.
Yeah. Shout out to all our women. All of our women. International Women's Day. Since we all came from our woman, got a name from a woman, and I came from a woman. We love you all. We love you all.
Shout out to all the women investors out there. Changing the world. Changing the world. Let's get into it. Market Mondays. Shout out to everybody in Atlanta. I was out there this weekend. Always love. Every time we touch the city, it's always love. So, I appreciate the Southern hospitality. Thank you guys, man. Atlanta, there's no place like Atlanta.
My dog.
My guys.
What's going on?
Listen, Caesar sent that package.
Shout out to Diddy, man. Shout out to Diddy, man. Shout out to Dion. Shout out to the whole Revolt family, man. Shout out to Revolt, man. Black owned, 100% black owned. And they really doing their thing. They got some flack early on, but they really out here hustling, man. They got Justin LeBoy. His show is doing well. They got Drink Champs.
He doing good.
Yeah, they got a bunch of stuff, man. Shout out to my man Ross Mack, actually. He's on Revolt as well. So shout out to Revolt, man.
A lot of love, man, from that industry. Shout out to Lex. You ran into Lex.
Shout out to Lex, man. Shout out to Lex. Shout out to Rose. Yeah, I was out in Atlanta. But yeah, man, it's a blessing to just have so many good relationships in the industry and just in the world, period. And shout out to everybody in Atlanta that just showed so much love out there, man. Crazy.
Y'all had it a movie out there, boy.
Yeah.
I ain't gonna lie, I'd have been scared. I had a whole mask on, whole Jason mask on. I was in there living.
Yeah, you've been the only one in there with the mask on.
Yeah, that's a whole different story,
For real,
man. Yeah, welcome back. I heard you was in the hood today. I heard you was in Southside.
Where I'm from, it looked like Southside. The house is just Matt was telling me like the house is like 650. I'm like, for all my people back home, it looked just like Gary or Southside of Chicago. So everybody's like, yo, don't look at your phone. I'm like, I know what to do. I'm comfortable. I haven't lost my sensibility. I didn't have a suit on, so I was good. But shout out to everybody in Queens, and shout out to Sneak and his restaurant, NK Restaurant, pretty dope too. So for those of you in New York, check it out.
Yeah, Queens get the money, man. MG, I heard MG had you out in Queens today. So shout out to Matt. Yeah. Shout out to everybody out there, man.
They put the blade on you, special.
Yeah,
man. Yeah, man. I was like, I'm gonna have my hood. I'm like, I'm from there. Like, let's not. It was fun though.
I see you getting in your photography bag too, man. Taking in all the sights of New York, man. It's beautiful.
Yeah, man.
The architecture and landscape is dope. So yeah, I'm enjoying it.
Fall in love with the city, man. You in New York more than us these days.
The house is so small though. It has a beautiful view, but it's 480 square feet. I'm like, what I'm gonna do? Can't even put a queen size bed in here. Man.
Yeah, 480. You're at least 4
I'm about to go to Montclair somewhere.
Yeah, man. But let's get into it. I'll give the rundown of everything that we got going on this week, EYL. First of all, shout out to Dave Shands and shout out to Ash Cash. Ash Cash is a guest on Dave Shands' show right now.
Is he?
Yeah, so shout out to them both on EYL Network. Shout out to Social Proof Podcast and shout out to Inside the Vault. Shout out to the guys. And this week, Jose Rodriguez, my man, better known as the Credit Dude.
Solid.
I was listening to that episode today, man. I think that might be a classic. Like, that episode is crazy, man. So many gems, so much information, man. That episode comes out tomorrow at 5:00. Make sure you check that out. Everything about business credit, personal credit hacks, how to build your child's credit. You can never have enough credit information. It's one of these things where one episode, 2 episodes isn't going to do it.
It's life-changing information. Like
Yeah.
everybody's gonna have to deal with it, and I'm just so happy that it came out so well because he's such a good dude. Like anytime we've ever asked anything from him, and even when we didn't ask anything from him, he's always supported, always shouted us out, always posted us. So I was happy that we actually got to get his episode done, man. Yeah. The whole team is finished now.
For sure. And shout out to Envy. Shout out to my bro DJ Envy, man. I seen him in Atlanta, ran into him in Atlanta as well. So New York was definitely in a heavy. Yeah. Envy was working. He was for like 18 parties. Back to back. So
different type of hustle.
Shout out to Envy and shout out to their whole team, man. Shout out to Flipping and Jay Caesar. He got a book out right now. Make sure you check that out.
#1 book on the charts. Yeah, man. Shout out to C's. You got
Flipping Keys.
Got the #1 book on entrepreneur. So
shout out to them, man. Good people. So we're gonna
get ready to do him 500 credit due collab and break the internet.
Yeah, we got something brewing.
Yeah,
we got something brewing, bro. We got something brewing.
Yeah, shout out both of them.
Man.
Shout out to the big boss, man, Marcus Barney.
Yeah, for sure. This Wednesday, EYL University, we got a dope class with Jatalia. She actually taught the class about investing in Ghana before. So now she's gonna come back and do a follow-up class for this Wednesday. And your book club, you had the author come to the book club.
Yo, shout out to all the earners that was in the book club yesterday. We had the amazing pleasure of having Jason Reynolds, the author of Stamped, an amazing book. If you haven't read it, if you haven't got the audiobook, please go get it and support just an intelligent man who gave a history lesson in a non-historical way. And he just lit the whole room on fire yesterday. If you was in there, you know what I'm talking about. And if you didn't catch it, it'll be up for you to rewatch it. It was amazing. I walked away from it feeling inspired. And I had to email him this morning, like, what you just said yesterday inspired me to be even greater today than I was yesterday. And it's very rare when you meet that type of level of brilliance. So when we do, and we get to share with our audience and all our earners, we can't take it for granted. So please do yourself a favor and go watch that book club again. I told Shai with that, it was like a podcast. If y'all was in there yesterday, it was like an episode. So shout out to Jason Reynolds and all the team. Oh my gosh. And everybody that helped put it together. It was incredible.
Yeah, for sure. So that is that. EYL University. The link is pinned if you want to join. We're currently having a 70% off offer for the entire year. So we would love to have you. We got a bunch of stuff every single day. Something is happening on EYL University. So let's get it rocking.
Let me do this disclaimer. Let's get the disclaimer. All right. Listen, do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Do your own research, do your own homework, y'all. Please. This is brought to you by the good folks at Earn Your Leisure and the good brother, Ian Dunlap, the Master Investor.
That's it. So Ian, the floor
those of you who missed out on the futures program the first time, you click the link in my bio. It is available for $1 before y'all kill me in these comments. It is available. So I love y'all. Let's get right to it.
All Black owned spirits brands.
By the way,
the only way. Shout out to O. Shout out to Rose. And shout out to the beautiful women that we have featured today, Lauryn Hill and Beyonce, two of the greatest of all time. But for International Women's Day, we had to do it right.
It's only right.
Given all the panic I saw everyone going through last week, I figured it was time that I do one of these. But before we get to that, I want you to go rate the podcast, give it 5 stars. And if we get to the #1 slot, or when we get to the #1 slot, or #2 on the podcast charts, I would give away 1,000 scholarships into the Stock Club as a way to say thank you to all of you. #2, go subscribe to my YouTube. So every day I'll be dropping new videos on investing. I give more in-depth analysis, and then prizes will be given each month. So I'm almost at 10K. Once I get to 10,000 subscribers, I will be doing a cash giveaway. So go to YouTube, look up my name, Ian Dunlap, and get some of the videos there. I appreciate you guys so much. And then tonight, finally, Trading After Dark will begin at 9:30 Central. The first 1,000 people are available to watch on Zoom and fire away questions. Everyone else will have to go to my channel and watch on YouTube. And we will exclusively be talking about trading particularly the futures market. And then this is going to begin the journey of us going through 6,000 charts together as a family. Today's episode is sponsored by the Stock Club. So if you want to know where to get in, when to exit, which companies to stay away from, when is a good time to take profit, and how to hedge in the market, get a daily call for 20 minutes. Stock Club is a place for you. I would love for you to join us if you want a considerable edge in the market. Today's class, the biggest thing I want to go over are the 12 things that can cause a crash and how to protect yourself from it. Because last week I saw so many people panicking and worrying about a crash. And we'll finally break down what's the difference between a correction and a crash. But I saw so many people worried, I figured I had to address this today. But first, write this down. These are the 7 rules of freedom that we follow in Red Panda. Number 1, wealth is the ultimate goal that we are trying to achieve. And that's because wealth ultimately buys you freedom. And the purpose of that freedom is to do with your time what you choose to do, not what someone else chooses for you. And we want to be around people that are peaceful, inspiring, and full of integrity, and that bring joy and happiness to our lives. You have to realize that the secret is there is no secret or no shortcut. There is no get rich quick scheme. You have to build slowly, consistently, honorably, and diligently. So I need you for context as we're going through these. These are our North Star or guiding principles that we follow as a family. But these are the 12 things that causes a crash. And here's how to protect yourself from it. And I want to say, stop worrying about a crash. Anytime we have a pullback, I know Tesla dropped 34% and some change, but there is no upside reward without some downside risk. But number 1, overinflated bubbles bursting. So anytime that a market gets too hot or too frothy, at some point, those bubbles will burst. And if you're wondering when a bubble is going to burst in the industry that you're looking at, you need to go study the entire history of that particular market to get context for how long or how many decades you have until that bubble will burst. Number 2, so in 2008, we had over leveraging. And when you had mortgage-backed securities and exotic tranches and things and all kind of derivatives being thrown around, it leads to people leveraging and taking on more risk that is necessary. And it ends up damaging the system. So that's the second reason that a bubble can burst or cause a crash. Number 3, when you have banking panics or monetary contraction. So if you have a run on the bank, that is the third reason that a crash could happen. So we haven't had any banks at scale being funds being liquidated from customers, so we're fine. No extreme monetary contraction, so we technically are in a safe zone. Number 4, decreased lending. So whenever you start to see that banks and financial institutions are lending at a slower pace, it is usually a sign that the market is going to crash, because they then want to protect the capital that they have in their reserves and on their books. Be mindful of that. So when we're telling you to do your research, these are things that you need to go look at, and you need to spend an hour a day researching. And I've been telling everyone at Red Panda, and I'll share with you that you need to spend at least 100 pages a day in terms of your reading time to get a considerable edge in this market, because without it, you are technically gambling. Reddit and Discord groups do not count. So when you have decreased lending, that does lead to a potential crash. Number 5, when you are using excessive leverage. So whether at a macro scale or in your own personal account, these are some things, because flash crashes and fat finger trades have happened, and they've caused some damage catastrophically in the system when they were over leveraged or used excessive leverage on a set of particular trades. Number 6, interest rates and inflation. And people act as if interest rates and the yield went up to 9.875%. It barely bumped. And in this market, stocks can still rise when bonds yields go up. It doesn't mean that we're going to have a crash as a result, but interest rates and inflation can adjust the market and have a negative effect on it. Number 7, political conflicts and unrest. So anytime that there's political uneasiness, and when we had a prior president that caused some of that civil and political unrest, things were rocky or choppy at times. Number 8, dramatic tax changes. So if taxes go up to 65%, it will have a dramatic effect on the market and how people choose to invest their capital. Number 9, this is key, panic and euphoric pressure from the market. So anytime where a market is too hot and people are saying this thing will never come down, it's going to the moon and it's never going to slide down, that is usually a sign a crash at some point or a deep correction is imminent. Number 10, it could be a combination of these factors. So if you have political unrest with rising interest rates, with excessive euphoria, excessive over leveraging in accounts, it could cause some danger. The one that I'm most fearful of is in maybe 2035, and that's at the time when China should surpass us as the number 1 superpower, is if our student loan crisis and that student loan bubble pops. I think it would be 3 times as big as the real estate crisis in 2008. Number 12, funds flowing out of a particular industry or sector and into others. Now you're seeing a lot more funds putting money into energy and gas companies. And I'll tell you guys, and I'll address it later, even with the airlines, you have to stop chasing what other funds are chasing and focus on the long-term horizon, because you're not able to get the data in real time when they're executing to get out of a position or sector and get into another. We're going to do quiz time finally about charts, and I want to ask you if these assets or companies are going up or down, but let's do that at the very end. But I want to ask you a question. If we have 4 to 14 months of a slow period in the market, what would you do? Type in chat, what would you do? I'm going to give you some insight. 1, and this is where you would start to build a base. So in a flat market, every month you still should have the number of shares that you're looking to buy per month, whether it's 100, 1,000, 10,000, etc. You still need to execute that amount. Number 2, only focus on 8 stocks that you would want in your primary list. And these 8 would be the 8 that you would pick if your life or your family's life were on the line. Type to me, what are those 8? Number 3, pick the top 50 stocks you're interested in and write the prices down that you will want to acquire that asset or that stock. The time to not write the price down is when everything is in free fall because your emotions take over. So now that we have some stability today, it would be great for you to go write 50 stocks that you are interested in and say, hey, if it drops to this price, I would want to get in here. I always do my pricing planning on days when the market is up, not when the market is down. So when we finally slide back down, I have an advantage of where I want to get in and I can think clearly. I have to say this, buy the dip is not a strategy. Please put this in chat. Buy the dip is not a strategy. That is a cute axiom. But what a dip is different to every person. One person may see 2% decline as a dip. Another person may see 10% as a dip. Another may see 25 to 50%. You need an exact price. So are you going to buy 20% off, 30% off, 40% off? But dip is not a mathematical measure. It is a wide-ranging, in this case, euphemism. You have no edge from a stats perspective, just buying the dip, right? And then some of you bought the dip and you end up looking like my guy here who needed taper and had a rough day, and you bought the dip and it kept dipping. So we talked about the 72 period moving average. The 200 is another way. On an episode with Mark Cuban, I gave you another way, which I think is superior for those of you that are using it. Great job. But I want to ask you a question right now. What would be the best price right now, hypothetically, if you want to buy Salesforce based off the 72 period moving average? Everyone's commentary in chat should be around the same price. Please type this and write this down. You need one method of entry to buy all of your assets. And I posted this last week, but Square's the new JP Morgan, and congrats to Jay on that deal with Jack. So Square is one of my favorites, has been for a while, but here's how Square makes money. Now that they're going into the banking space and they can do lending at 10x the capital reserves they have in their possession, that is going to be a huge benefit to them. And then we'll talk more about title and that acquisition, but there's a great reason that they end up acquiring title. Very strategic move for Jay-Z and Jack, and the amount of data that they'll be able to get from that customer acquisition and data play is going to be amazing. But number two, transactional fees from selling products and services is number two. Number three, Bitcoin. It's a great hedge. They bought $170 million worth in February of this year. They make 63% of their money from Cash App, and then 55% of their gross profit comes from people selling on their platform. So they're in banking, transactional selling, hedging with Bitcoin, and acquiring a music service that would give them access to more customers that will potentially use either Cash App or their platform. As well played. A key tip, another way to hedge in the market when everything is falling is to get in at better prices and avoid non-competitive entries. In Red Panda, we do not die during these dips. We acquire and we wait. And I know some of you were like, hey, I don't think these prices are ever going to hit. And then Apple hit, then Amazon hit, and then AMD hit, and then Tesla fell to the area I said will fall. You have to plan in advance when you're going to enter. So if a house is on sale for $250,000, at what point is that house a good deal for you? It's not a good deal at $235,000. And the crazy part, what you guys don't realize, the same methodology that I've given you to be able to buy stocks, you can use it to buy real estate or businesses or commercial real estate. So once you have one system for entry to formulate and calculate your prices, you can use it for every industry that you are a part of. I want to walk you through historically what happens in February and March, because I know for some of you that are brand new, you've been kind of brainwashed into thinking that the market moves in a random fashion, or even that it moves in a rational fashion, and it does not. So I want to walk you through the stats of February and March, historically what the market has done. And I need you to know now that February is one of the weaker performing months. January, usually pretty damn good. February, not so much. So from 1980 through 2019, the average stock market returns for the S&P 500 are 0.29%, and September is often the worst month. So please write that down. The day before President's Day weekend, the S&P is down 17 out of 29 years. So does that put the probability of the market being up or your portfolio being up or down? Please put that in chat. There's enough data that has been written on investing that these drops or minor corrections should not bother you. February's expiration day was on the 19th. So once we had expiration, a lot of the money had not flown back into the market yet. And in March, the end of the month is usually weak. So if we have a drop or we're flat at the end of this month, don't be surprised. It's typical. This is the typical movement of the market. And March has been rather turbulent in recent years. So in March 2020, the Dow declined 13.7%, which was the worst March since 1938. So if we have another downslide in March or a flat, do not be surprised. There is a seasonality to investing that I need you to know about. And with the Dow being down 1,469 points from March 9th through March 22nd, 2001, this is a common occurrence decade over decade. Now, I've been telling you guys, I need you to Google when does the Federal Reserve start to print money in March. You will see a correlation between when the recession ended versus when they started printing money. In 2008 and in 2020, the market recovered. The recession ended then, but it was because of the influence of the money machine that the Federal Reserve used to get us out of danger in both instances. The last 3 out of 4 days on the Dow is a net loser 20 out of 31 years. And I have to stress this. Stop gambling, stop buying at highs, and stop buying at stupid prices that do not give you an advantage. And the hardest part about investing is knocking out all the noise and eliminating all the noise. And even if an asset that you love, like Tesla, is at 850, right? It doesn't make any sense to buy it at those highs. You have to wait till it pulls back. And if you know Tesla on average is going to drop back 30 to 42%, you need to wait for those dips to buy. So for all my real estate people, you know this. If there's a house worth 1.2 million, there's no reason to pay 1.13 for it. It's better to wait till it's on sale for 700,000, maybe 560. And then no matter what happens in the economy, you can sit on that asset and then sell it again for 1.1. Please write this down. The price that you get into the market matters more than almost anything. You can't print alpha or get any gains if you're buying at top of market. And I have to stress this again, no matter how unsexy it is. And my grandmother used to tell me that you don't have to advertise or promote the truth. It is what it is, baby. Hold for the long term, 10 to 20 years, or face a chance of losing it all. And the reason why most people don't want to hold for 10 to 20 years is because they've been making bad financial decisions for the last 10 to 20. You have to choose whether it's going to end. Whether you choose to hold long term or not does not affect me at all. I know I'm going to hold for 10 to 20. And I'm going to make sure that Xander holds his for his children. And then hopefully his kids won't mess up. And then they'll hold for 10 to 20 years minimum in possession. But tonight, write this down. I want you to go through 20 stocks. Go through Portfolio Visualizer or macrotrends.net. Portfolio Visualizer or macrotrends.net. And I want you to see whatever company that you're interested in. If you've held it over any 10-year period, will you be down? The 10-year period is the second safest time horizon to hold your assets. And this applies to real estate and businesses. If you can make it through that 10-year stretch, you're okay. 20 is the number one time frame, 20-year period. Go through the 20 stocks that you like the most and tell me if you held them any 10 years, would you be in profit? That will be your determining factor if you should hold for a 10-year period or not. And the thing that I'm realizing is that most cannot trade because they don't have patience. Most are not patient because they do not want to make money. And most do not know where to get into the market. If this is you, if you can't trade, if you're impatient, you don't know where to get in, please let us help you. But you have to have your edge of where to get into the market. Write in chat, what is your method for getting into the market? And it can't be diamond hands and buy the dip and hodl. That's not a strategy in itself. Even though if they said hodl for 10 years, I would agree with it. Even with Bitcoin, if you look at the top 5 crypto assets, if you held them for a 10-year period, you would be in profit based on the velocity of them, but also the risk. You have to be able to stomach those and ride those waves out. And I can argue without the acquisition of Apple into Buffett's portfolio, and kudos to the team at Berkshire, without that addition of Apple, the traditional method of acquiring companies that are rooted in American infrastructure, I think Berkshire would be down a lot more. That $50 billion gain has helped a lot, and they're going through a transitional period where I think at some point Warren is going to step down here relatively soon after an illustrious career, which is well deserved. But this $50 billion gain is tremendous. And meanwhile, Buffett is saying it's the best business in the world that I know of. But on Twitter, if you scroll through and look, you'll see somebody like Johnny Jackass saying Apple isn't growing. There's no innovation. There are 2 pockets of investors that I'm noticing. Ones that are just getting started, that don't have much capital, that are looking for more growth, right? And then you have a seasoned investor or seasoned business person that is looking for safety. I'm going to tell you, no matter how much money you have or don't have, the number one thing that you have to be focused on is defense. It's fun to get 500, 800%, but what happens when it goes away? And I know for us, when most of us don't hit the mark that we need to, we quit. Or even worse, we finally make some big gains and then we end up giving them away, and it hurts. These are the top 8 weaknesses of most investors. Please write these down. Number 1, most do not know where to get in. Given the thousands of books and millions of hours discussed on investing, most people will not use one system long enough to know where to get in. Number 2, most do not know where to get out of the market. You need a predetermined exit, either percentage-based or price-based. Number 3, most will not use a predetermined exit. So If you're in a longer position around the 500% mark, if you can get that, that's probably when you should take profit. If you can get 1,000% return, great, but you need a predetermined exit for when you will leave that position or that trade. Number 4, most will not be patient to let their profits mature. So some of you are great at letting your winners run for a bit. Some of you take profits too soon. You'll get in the trade and be up 3% and be like, I'm gonna take it. You have to let your profits mature at some point. Number 5, you choose to gamble over safety because, let's be honest, and I've done it, you made money mistakes in the past, and now you would rather gamble to try and make up for lost time, and that doesn't work. Number 6, selection of bad stocks due to be a bad business person. The thing that I see in all the meetings and conferences that I go to, in every meeting that I have, is that the good business people are always selecting good companies to invest in. And the ones that are more volatile, like Neo and Plug, right? They're buying them at such low prices, it's almost impossible to then lose. Bad business people or people that do not have systems in place, I see that they're always chasing. And how you do one thing is usually how you do any other. Number 7, most will not do enough substantial research to become an incredible investor with an edge. And number 8, most will not read 100 pages per day to get a competitive edge in the market. So let's play versus. Let's do Apple versus your company. So the company I have, revenue is $274.5 billion. The net income is $57.4. Total assets, $323.9 billion. Cash flow of $80.7 billion. And the one that I'm picking is number 1 in their industry. The company that you're pairing against my company is at number 1 in their industry. In order to pick a stock and say, hey, I'm going to pick this company over Apple, it needs to have 4 out of these 5. And there are companies in which you can argue they may not have the total revenue, but the other 4 they have. But you have to compare stocks versus another and not just gamble. We are in an extreme macro environment in which traders are succeeding incredibly well. But at some time, that table's going to turn, and 2021 will not be like 2020. It will be a choppier, more volatile environment. And you have to have your decision-making matrix in place and not deviate from it if you want to be able to get some great gains. I want to really quickly touch on return on investment models and help you out. So there's 4 that you can follow. You want to invest $1 to make 5. You want to invest 1 to make 10, 1 to make 50, and 1 to make 10. So Jay has done 2 deals with Tidal, 1 with Sprint and 1 with Jack. So he acquired it for $56 billion, and he sold 1 for partial stake, I think for $200 million, and the other one for $297. What investment model thus far has he used with Tidal to monetize? Was it 1 to 5, 1 to 10, 1 to 50, or 1 to 100? And let me say this as we get close to wrapping up. If you're not putting in an effort to get good at this, it's because you don't want it. I'm going to be real with you. There's more information flowing around these last 18 months than I think probably the last 8 years prior, and definitely 10 times the amount when I first started in 2010. It didn't take me all of this to get started. Like, either you want this shit or you don't. Every blueprint is there. You have to pick whether you're going to be a long-term investor, short-term trader, but you have everything that you need in front of you. You have to go execute. You only need 4 great companies. If you have 24 companies or 18 companies, you made your own mutual fund. For what? I don't want you to be lost like this spaceman in the forest who does not know where the hell he's going. Should you have 10 positions? Someone asked me a great question. And let's say if we hit a crash, should you sell half of your positions to be safe? I would argue that you need to just find stocks that are pretty much crash proof. So if the market goes down 50%, they may only bleed 15 to 28%. They're not going to fall 50. And definitely you don't want stocks in your possession that if the market crashes 50%, that they go down 78 or 80% in value, because those are very tough to recover. How do you know how low stocks will go? I wish I can give you an easy answer, but it's just a lot of time in the market. I wouldn't advise anybody to do 12 hours a day, but if you're doing 4, 5, 6 hours a day, and you use some of the indicators that I've given you for free on this show, you will have an idea to know how far that market would drop. But that 72 period moving average is pretty damn amazing. And then you have safeguards to preventing a stock market crash. So like at level 1, at a 7% drop, the market will halt. And then again at 13%, it'll halt again. And then level 3 is at 20%. So last year we had a bunch of halts, and I remember Amber was killing it, catching these shorts on the ES when the market was gapping down violently, right? But you have to keep these levels in mind. So please write these down. So if we ever have a hard push down and we drop 7% hard at the open, the safeguards will trigger on the platforms to give the market a chance to calibrate itself. And really quickly, let me walk you through the difference between crash and correction. So a crash is something different altogether, right? So if you look, it took about 4 years after the Great Recession of 2007 and 8 to recover. The markets took about 25 years after the Great Depression to recover. A correction is the decline of 10%. So corrections happen every month. You have to think of them as like rain cycles or when it snows. And I've been out here in New York for a couple of days, and damn, it is cold. But we don't panic when it rains or when it snows. It's the same thing. You have to prepare for a 10% pullback at any given time. That is normal. But a recession is different. As a recession is a business cycle contraction. So when there's a decline in activity overall across the entire economic landscape, and these things usually happen when there's a widespread drop in spending. Some of you keep asking, how do you find entry points into the market? I'm begging you, please go listen to that Mark Cuban episode from top to bottom. I give you everything that you need. It's probably the best episode that I created. How do you differentiate from holding a long-term position versus falling in love with a stock? I think you should only fall in love with stocks that are going to work out for you in the long term. And if interest rates go up, the easy gains will go away, but it does not mean that the entire market is going to fall as a result. Interest rates have been high before, and the market has flourished. Homework for tonight. Go look at every decade, the 1950s, 60s, 70s, 80s, and 90s, and figure out which industries did well when interest rates were higher. Now, what would I do if my entire portfolio got wiped out? I would recalibrate, write down why I bought those assets, and did I get in at the best price? But this is another reason why I stress investing in index funds, because even if you have an index, the probability of it going to zero, if you have one of the mainstream indexes, is less than 13%. And I know a lot of you are like, hey man, if the market drops, I need to get UVXY. Only hold that for 2 to 3 days max. The best inversion strategy is to buy at the best prices. You guys are going to have to practice at getting good at this. There's no other way around it. I know it's exciting to potentially catch one of these inverted assets and then ride it up, but after 15 days, 20 days, 30 days under your possession, it's going to eat away a lot of your gains and everything else. And I've said this before, the ultimate hedge is owning a business or multiple businesses. Pair with stocks, real estate, life insurance, and ultimately you want to get to 24 streams of revenue. You are not going to have all of your businesses and stocks and real estate and life insurance and your other streams of revenue fall apart at one time. So in 1948, Benjamin Graham, which is Warren Buffett's mentor, bought a considerable stake in Geico. And if you go look at the returns and where Buffett got this model from, it was probably one of the biggest returns that Benjamin Graham ever got, even though his thesis was investing in value. So throughout history, no matter what you do, you cannot avoid this matrix. You need to have businesses in your possession so you're able to hedge off any crashes in the market. And I'm not saying we will, but let's plan for a worst case scenario. If we hit full recession, or even worse, full depression, and this lasted for 4 to 8 years, what would you do? Because it's better to have the fire extinguisher and not need it. So in terms of everything with your trades, what would you trade? What would you swing trade? What would you hold for 3 or 4 years? What would you buy? Please put that in chat, because you need to have the plan before everything hits the fan. Not saying that we are, because I think people overreacted to the interest rates conversation. But if we did fall apart, what would you do? Please put that in chat. And honestly, if you panic this week, that's a sign that you did not get into the best prices. Because I'm gonna be honest, like if you got into some good positions, maybe even 3 months ago, but especially like last July, kudos to those of you that were in elite, and then everyone in stock club, the position you're still holding from last May, last March, still doing well. If you're just starting out 3 weeks ago, it may not be the best feeling, but give it time and things are going to work itself out. And I was going to include the screenshot of my guy who asked me this question about being down 100,000, but I don't want people to run to your page. The thing I will say to you, first and foremost, what a blessing it is to be able to be down 100 grand, right? But give it time. It's going to work itself out. Fortunately for you, you are in some great positions, but at one point you were up 500%. I'm going to tell you, trader to trader, anytime you get to that level of being down, being up 500%, that's probably when you should take profit. And I know everybody's chasing 2,000, 4,000%, 6,000. Great. Because the numbers that you can potentially hit are astronomical now. But what if that 100% gain then goes to 40? And what happens when we trade, we'll lose a certain amount of money that scars us. So the main reason I don't trade midday, because I had my biggest financial loss trading midday when the volume was its weakest. Kudos to my brother Marcus. Like Marcus will not trade around any Federal Reserve announcements because he got clapped doing a Federal Reserve announcement and it will scar you. What I don't want to happen is I'd rather you have the pain of taking profit and being up 300,000-400,000 and getting out, opposed to being drawn down a lot and not being able to recover from it and then potentially quitting and saying, hey, that stock market thing is not for me. The stock market is the ultimate mechanism from taking money from people that are undisciplined with no plan and transferring it to people who will follow their plan to a T, especially when you're competing against quants and algorithms. What type of companies will high interest rates affect? It depends on how high the interest rates will go. But the first ones are going to be tech that have reached their peak. Now, tech isn't going to fall apart, but you'll see a couple of pullbacks in tech. And then also companies that do not have a considerable edge or that do not have high market cap or high market share in their space. So all the companies that were like 8th in their industry, they're going to get beat up pretty bad. And some of you keep asking about how I built my discipline. And I can give you a long, eloquent answer, but the truth is, like, you have to have a driving force in your life that makes you want to master this or something. For me, it was Xander. I wasn't this person before Xander came into existence. So you're either going to have to be so frustrated at your circumstances or love someone so much that you want to provide for them. That's it. Everything else is conjecture. And I can ET you to death and I can Tony Robbins you to death and tell you all these things, right? Truth is, you either want this shit or you don't. But often I have found that we will sacrifice more for others than we will for ourselves, especially for those of us that are parents or have family members that we care about. So you have to look and see, who do you care about and who do you want to provide for? Type in chat, who do you want to provide for and make life a little bit easier for? That has to be your driving force. And often, when we don't have a mission that is bigger than us, we tend to be selfish and won't put the work in. Maybe investing isn't your thing, but there may be a business that is perfect for you, that if you gave your all to, you can have a considerable impact and outcome in. Someone asks, why are airline executives selling their shares? And truth is, maybe they want to secure their future. Everyone does not have the luxury of waiting if they're in an industry where they've been beat up or laid off. I get that. Ideally, I want everyone to hold for a 10 to 20 year period, but I get life happens, especially if you have kids. So a lot of people are taking profit because now the airlines have recovered somewhat. And now you can begin to see some of the gains from the shares that you've had and they want safety. So don't chase the rotation and when they're exiting. If your plan is to hold and you can afford to hold for 5 to 10 years, please do so. And I need to say this as we wrap up. Technical analysis means nothing without understanding the macroeconomic cycle. and understanding the history of the underlying asset that you're trading or investing in. And you can disagree. And this isn't me being pompous or arrogant or being an asshole. But if you disagree, have you gotten rich from technical analysis alone? If you have, great. But most haven't. So write this down. In addition to technical analysis, because there's a lot of people talking about charting who have not charted for a year, right? And have no understanding of macroeconomics or the cycle that we're in, or what they're trading. So once you understand the technicals, meaning what price is best to get in, what cycle of the market are we in, pessimism, a middle ground, or euphoria or extreme euphoria, plus what the business does, then you'll have your edge. That's a holy trinity. It's not just technicals, because some of you are getting your asses kicked using RSI alone. Oh, we're oversold, so now okay, great. And what happens? Now you draw down 50%. It's deeper than that. And then also understand, technical analysis are not concrete blocks. So just because you set a trend line at 212 doesn't mean that the market won't say, fuck your 212. And once you understand the economic cycle that you're in and the history of pricing. So go look at 20 years on that asset that you're looking at, and it'll give you an edge. And these are the top lessons that I've taken from Howard Marks. And no matter who you learn from, you understand that the lessons are all the same. So number one, be aware of the market cycle. Are we at a top, bottom, in the middle of a cycle of pessimism or euphoria? Right now, we're almost at a top in everything. This reminds me a lot of last year. A lot of last year. Number two, returns are higher with more volatile investments, but so are the losses. And kudos to Michael Backnick. It was a great point that he made. It's like you cannot get high returns without high volatility. It does not happen. So if you want those gains, if you wanted the gains from Tesla from last year, you have to deal with the drawdown of now. Number three, you never know 100% of the time what will happen in the future. You can only play the probabilities. For me, I know if I wait to the ideal prices, kudos to you that got in on like the entries for Apple. And even if it dropped a little bit further, you weren't down a lot, right? Apple technically could fall to $83, worst case scenario. But I know the probability of it falling from 121 or 118 down to 83 is very low, less than a 4% chance. You don't want to gamble. You want to know, in terms of percentage, how will this play out before you execute the trade? And it's the big lesson that no one wants to hear, but it's the most important part of the game. So Dream Team, listen up. Red Panda Snipers, listen up. Risk control is key, and it's all that matters. I don't care how much you can make. How much can you keep, and how much can you prevent from drawing down? So let's say you have 7 losses at 1.6%. That's 11.2% drawdown. Anybody can withstand 11% drop, right? Put yes in chat if you can. 7 losses at 22% equals negative 154%. Because what happens when you draw down and you blow up your account? You put more money back in. And now you say, okay, I lost 10 grand. I'm going to put 10 grand in. Now you think that you're starting fresh, but you are not looking at the capital that you lost already. So once you get up 5%, snipers 8%, if we lock in 2, we have a little bit of safety. And then if it goes 50 or 80 or 100%, great. But most people do not have their risk parameters in place. And once you look at history, all the hedge funds, all the traders blow up accounts over the same reason. It's mismanagement of leverage and overstepping the number of trades they should take. This is very key. Love your thesis, but look for insights that is opposite of your own. I love Tesla. Been a fan of Elon since he was with PayPal Mafia. But if you read the reports, yes, the revenue could be better. They are not as stable as they could be. And even though I love Elon, he's probably one of the more vilified entrepreneurs of this era. But they are in need of a Tim Cook. They need an operator. Elon's probably one of the greatest engineers ever, arguably. But he needs an operator to help give them an edge and drive in more revenue. Love your company. And the arguments about Apple not being innovative are true to a certain degree. But the operations that Tim Cook has brought is innovation in itself. Luck, helps, but excessive preparation breeds luck. So luck helps, but excessive preparation breeds luck. And nothing is dependable as market cycles. You have to understand the market that you're in. So literally, if we're at the top of the market, please stop buying and adding positions at the top of the market. Wait for the market to drop. If the house is worth $250, wait for it to go on sale for $200. Don't buy it at $249 because the cabinets are good. And the last thing from Howard, the thing that I find most interesting is how paradoxical it is. How often things that seem obvious, which everyone agrees on, turns out not to be true. So like cruise lines last year, airlines last year, were there some gains there? Yes. No one was talking about how important it was to be into tech, but a few people, and I was one of those. Even Apple is a boring business. There's no gains there, no gains left. People have been saying that for 20 years. You can go look. And on this final note, I need you to screenshot this. I don't agree with most of the things that this man says, but this quote is amazing. You're going to pay a price for every bloody thing that you do and everything that you don't. You don't get to choose to not pay a price. You get to choose which poison you're going to take, and that's it. So you're either going to take the time to master investing and take control of your financial life, or you're going to pay the price to someone that has put all of their energy, effort, time, and energy into studying it, and they will be able to control your life. And I think that you deserve better than that. And let's be honest, it's not that damn hard. It's not that hard. Whenever I ask anyone, hey, what are your favorite companies? No one is saying, kudos to the people at Exxon, but no one's saying Exxon. It's not one of the first 15 companies that people are mentioning. You are capable. You are worthy. You deserve this. But you have to pick the price that you're going to pay. So opposed to arguing and bickering online or even in comments, I need you to choose to master this or not and pay those prices. Love you guys. Over.
Yes, another college class.
Trying to make it for the audio for last week.
Yeah, so good.
Yeah, I feel like you did the step. You shot the three and then turned around.
Yeah.
Like, that was fire,
know,
man. They said the presidential campaign has started. They said your presidential campaign has started. Dunlap 2024.
Hold on.
Better than college.
I appreciate y'all.
Yeah, for sure, man. Definitely higher education, for sure. I'll find a way to learn.
That's a fact. Shotty was smiling over here when you put up that defense is the best offense. He been telling that for
forever. Tell him, like, you were supposed to dive into it 3 weeks ago, but can you dive into it now? Like 200% gains mean nothing if a person going to draw down 180. And for us in our community, we lose 100%. We're never going to come back to the market. But I think it's important on the advisor side. Can you talk about how important it is? Because if you lose 80% for a client, oh man, they're going to be all over Instagram. You know?
Yeah, no, it's true. And it's like, even for me personally, for all of us, me personally, I lost a ungodly amount of money, but you never lose until you take it out. But last couple of weeks, I lost a pension. I lost a firefighter's pension.
Yeah.
But just wins and losses in this game. So I'm not really too concerned. But what I kept saying, and this is why it's important to diversify your portfolio and not have all just one thing, not just have all individual stocks.
Yep.
And this is why you got to be careful with options as well, especially short-term options, because it's not, my philosophy on it is that it's not so much if a company is a bad company or not. It's the time frame. The problem with short-term options, any option, but really short-term options, you put time frames on it. So like, we know Apple's going to come back. But if you got an April call, you might not have enough time. You're gonna run out of time. So that's the thing that's really like difficult. And that's what Bonawyn was saying. Like, if you really do it right, you don't need to have your whole portfolio. The reason why long-term investing makes sense is that it gives you time. Like investing, like the most important thing that you have on your side is time. Because you could withstand all kinds of anything if you just ride out. If you don't have time, you can make a lot of money, but it's like being in the league. Shot clock is against you.
Run against you. Yep.
no matter how good of a player you are, if you only got 2 seconds to make it from the other baseline to the other baseline, you're not going to make it. You're going to end up throwing a half-point shot, just hoping and praying that it goes in. So this is why it's extremely important to be intelligent and just to diversify. I mean, it's just a lot of stuff is common sense, but you know, when we talk about losses and protecting your portfolio, so if you have $100,000 in your portfolio, right, and that 100,000 goes to 50, now that's a 50% loss. But in order for it to go back up to 100, you got to have 100% gain. So the losses hurt you a lot more than the wins. Because like one of our friends was saying like, yo, I lost. He lost like 150,000 last week, and he said I never made 150,000 in a week, but I lost 150,000 last week. So the losses,
and they come come a lot
quick.
faster.
Yeah. So it's all a game of math. Like once you really start to understand the math is a language within itself. I was just telling that to somebody the other day. Like math is a language within itself, and once you really start to understand math, then you understand why the best offense is the best defense.
And it's kind of.
Go ahead.
I'm glad you touched on the inverted indexes because we spoke about it, but like you said, you don't stay in the inverted long term. You time it when you're gonna get out, right? 10 days, maybe 15 days. And so even my brother had that question. He was like, well, how come the S-Dow is not gaining? And I'm like, well, the Dow is at an all-time high, right? The NASDAQ is down. So there's different indexes that you can. So the S-Dow was one, right? That tracks obviously the Dow. But PSQ is more for the NASDAQ. So if you're in the PSQ, that's an inverted index for that. If you're trying to do the S&P, SH is an ETF or an inverted index you can use for that. So knowing that, like, these are like the mistakes that I made, right? So we're telling you because we've made the mistakes and we're telling you, hey, this is what you should be looking at. So if you're looking at the Dow and saying, wait, I'm not making any money on this inverted index, well, that's the reason. The Dow Jones hit an all-time high today. The NASDAQ went down 300 points today.
And if you study nature, you can learn a lot from studying nature.
Yes.
Like forest fires, hurricanes,
avalanches.
Yeah, those are all nature's way of purifying itself. The problem with forest fires and hurricanes, unfortunately, is that human civilization, we live in places that we're not really supposed to live. Like we're not supposed to live in Hollywood Hills and things of that nature because that's not really, but it's good views, right? So what happens with a forest fire is that's how nature actually purifies itself and new life is built. So if you really understand that, then you know that pullbacks in the market is healthy, it's needed. So when you see a pullback in the market, it's not something to run away from. It's something that is part of an economic cycle. This is something I've been saying for a long time as well, is that we haven't had a down year in 12 years. Usually, at least once every 7 years, we have a bear market. We had the shortest bear market in American history last year because we printed so much money. Eventually, and I hope it doesn't happen this year for my own personal sake, but eventually we're going to have a down year. So what happens if we have a down year and all of these people taking so much risk and over leveraging themselves? Think about how bad these last 2 weeks were. But
they weren't bad. That's the crazy part.
Well, relatively. Yeah. But I mean, at some point, we're gonna have a down year. So if you think your portfolio was hurt in 2 weeks, what's gonna happen when it's negative? Like I came into the financial industry in 2007 when the stock market was down 40% for the year. 40%. Like people have short-term memories, they forget about that. Like we just are in a 10% correction. Imagine if the stock market is down 40% for 52 weeks.
Yeah, because people are looking at it.
It takes 20 months to recover. And at that time, housing market was weak, gas prices were high, commercial was messed up. I mean, the real estate bubble is going to pop at some point as well.
Yeah,
you guys have to get prepared.
Yeah, and you said another key thing, man. You said know your price point. And so know where you want to get it at. And most people don't do that. They play the guessing game. Like, I'm going to, it dropped, I'm going to buy it. But I gave a prime example, and we had this conversation when you bought QQQ. And I'm like, it's not at my point right now. I need it to drop to a certain point for it to get there. And I watched it run up. And I felt that. I'm sure people feel the same way. It's like, oh my God, it's running up. It'll probably never get back to that. But that's why patience is so important. So important. Because now it's at my point. I'm like, all right, well, okay, I got the range where I want to get in. If I see the momentum slide back up, I'm on it right away. I'm watching that chart. That's the homework, right? Like I'm watching it by the minute to see if it has an upward swing or if it has an upward momentum. Because now I get to get it exactly where I wanted it. It took me 4 months, And it was tough because I'm watching Shotty going, yo, man, you didn't get that QQQ, but I knew my patience
comes back down. Yep.
I had to be diligent with it. And like, I've learned my lesson. So that's true, man. I'm glad you said that. I'm glad you spoke on that.
And I want to say one more thing before we go to questions. And I know we got a couple other stuff on, but it's crazy if you really look at it, because the Dow Jones actually hit, the Dow Jones hit an all-time high today.
Yeah. Mm-hmm.
So the NASDAQ, it peaked at 14,175.
Mm-hmm.
Now it's at 12,609. So that's 11%. 10% is considered a pullback. 20%, now we're in bear market territory if it goes 20%. So it's crazy that, and I said this, I don't know if anybody remembers me saying this, but I said this at least 3 times. I said, I think tech is overinflated. I said this during the summertime. I said this when Josh Brown was on. Yeah. I said this a few times. I said, I mean, it's just common sense, right? Mm-hmm. It's like when you see all of these tech stocks just performing at all-time highs, what goes up eventually has to come down. Yeah. So not to say that, long-term, do I think that Tesla and Apple and Google are going to be, no, of course not. But at some level, we had to see this coming. Like I said it, I'm on record saying, like, I think that tech is overinflated. Yeah. And now we see a rotation happening where the stock market is not down. The tech side is down. Right. Like NASDAQ
the opportunities in value. Yeah. Like if everything was at a high, we can't keep buying everything at a high. You got to go pick up some of the lower value companies and push those up, and then tech will slide back down and everybody will push tech back up. Like the thing, I think, go ahead.
Okay. I was going to say that there was opportunities, and there was plenty of companies that we've spoken about that you had great opportunities.
Well, I want to because I'm gonna give you credit. You said this company a while ago. You said this company over a year ago, and you kept saying it, and I wasn't really too bullish on it. But all-time high today on fire, Disney. This is something that you said several times. And California is opening back up. Mm-hmm. They Disneyland, they're gonna start to open back up Disneyland, let alone in streaming services.
You wasn't rocking with it.
So this just goes to show you, like Ian says, there's never a bad market. It's just bad entry points. And when something is up, something else is down. Right now, tech is down heavy. Mm-hmm. Disney hit an all-time high.
211.
You want to talk about Disney?
Yeah, man. I mean, we saw it from the beginning, right? When we spoke about it on the podcast, like I think like the first couple episodes, when we talked about streaming and the power of streaming. So to watch everybody be home during the pandemic and knowing that they have plenty of content, they wouldn't create a streaming service if they didn't have at least 2 to 3 years of content. And so they maximize on the content. They're hitting numbers. Their competitor, the number one competitor, Netflix, it took them 10 years to build 100 million subscribers. They did it in 12 months. Yeah. And so that type of revenue in 12 months is incredible. Now, most people know that Disney has parks and they have licensing and they have blockbuster movies. None of those things were included in their revenue, right? There were no movie theaters to go to. There were no parks to go to. Malls were closed. The vaccine is coming. Mm-hmm. People go back outside. Disneyland is.
Here's the crazy part. They don't even have a lot of great content yet.
And that's the thing. The signs are all pointing to extreme growth, right? You know they're going to put billion-dollar movies out. They've done it for the past 5 to 7 years. You know people are going to go back to Disneyland. 35% capacity in California right now. It's coming. It's now added to the streaming.
I'm going to tell you something too, as far as like just traveling around the country, going to Atlanta, going to Miami. The world is opening back up. The world is opening. The world is opening. I saw things in Atlanta that
Atlanta is never on ETF,
but I would never see. It's hard to explain what I saw this weekend in Atlanta. But as an observer, no, it's open and like I never saw this many people in a party in my life, let alone in the middle of a global pandemic. I say that to say,
be safe.
Well, yeah, first and foremost, be safe. But they're ready to go. When you see the governor of Texas say it's over, so 100%. We could debate this whole. I'm not here to debate if it's healthy or not, or if that's a different conversation for a different day. What I'm saying is that this world is opening back up. It's gonna open up, and by 2022, the floodgates is gonna open. All of those situations is gonna be a go.
And this is why we spoke about this. And Ian, I know you remember. I said Live Nation. killing me for saying Live Nation. People have been killing me for a lot of like the DraftKings thing, Disney thing, but the Live Nation was like,
how could they argue with it? The world's not going to be closed forever. And then, and for entrepreneurs, you have to learn too, even in moments of extreme pessimism, if you go look at Jesse Livermore's story, if you go look at the last recession or the Great Depression, there were a lot of people that became millionaires during that cycle because of the same reason. So even when there's a lot of disaster, there's always opportunity there if you can find it.
More money in the drought. But the Live Nation thing, because I want people to really see it. If you go look at their chart, right, they were on pace to have an all-time year in 2020 just because of the concert sales. And you know, they control most of the venues. Most people don't know that, but they control most of the venues that people perform in. Obviously, Corona hit, there was no performances. But what you didn't realize, and this is one of the things that they released in their fourth quarter reportings, is that 83% of the people who bought tickets didn't even ask for a refund. 83% of ticket buyers didn't ask for a refund. So that money's just sitting on capital. Plus, I think in June or July, you had the Saudis invest $500 million in the company. So you got $500 million plus 83% of the people who've never even asked for a refund, just waiting to come back. They're saying now, like by summer, festivals are going to have 75% capacity. If he saw that many people in a party, imagine when.
And then 24, it's going to be insane.
Party is now at the festival. You're
The
talking
tour,
thousands.
yeah. And the Versus tours are going to be probably the biggest hip hop tour of all time.
If they do it right, they got a great chance.
They're going to do it.
And somebody said, so where should we be moving right now? I want to answer that question. I want to unpack that question if I can. Shout out to Bam, our guy in Atlanta, XLF. He's been heavy on XLF. And XLF is all-time high. That's the financial. That's the financial ETF.
Yep.
So the XLF is something that the financial sector is on fire right now. Pretty much everything is on fire right now except for tech. So, but this is something that you have to be careful about because somebody just said, I think it looks like I missed my entry point on Disney. It's like cheating on your girlfriend, right? Like when you cheat on your girlfriend, it's like you get caught at the wrong time, then you go back, and then it's like you. Just stay the course, because what happens is that
be faithful to the positions that you have.
Stop cheating.
Stop.
Kudos to the stock club members that got in at 100. Just hold quality for a long period of time.
The grass is not always greener.
It's never greener.
So
no, it's not. Because you always gonna get caught when you water in the other lawn, and then it's like, damn.
Why are you doing that?
Respectfully, no. So what I'm saying is this. This is what I'm saying. So you are looking for an entry point for something that's at an all-time high. But we just said tech is a major pullback. So instead of looking for an entry point at Disney, this might be a good time to start looking for entry points in tech.
Exactly.
Or double down on your position. If you brought something and it now you can actually dollar cost down. We talked about that before as well. You dollar cost down.
Yeah.
And like, so if you brought Tesla at all-time highs, now you can dollar cost down, and now that brings your average buy point to a middle ground.
523 is not a bad entry point if you're looking to hold for a 4 or 5 year period. Right. By the way, for Tesla.
You watch it at 850, you watch it at 812. It's at 560. Like,
yeah.
This, if you wanted a time, here's the time, right? If you wanted Apple, you watch it go up to 145. It's at 118. Like what's that? I mean, what's your entry point at? The one has been created for you. So Ian.
Homework for the night. Map out the 100 companies that you like and go write entry prices for them. Stop all the other cute shit. Yeah. Go write them prices. Because when they hit and we have a 40% pullback on some stocks, you're going to be elated. But the reason why some of you are not getting the edge that you want, because you're not doing the work. I don't want this to be church. I want us to hold hands, pass the collection plate, and we all get coins together. If you put in that work, set match. I'm not here to preach to you though. So
yeah. So stop trying to rotate. Like I think Ian said, you're gonna rotate yourself into poverty by rotating out of these positions because you keep buying at all-time highs, and every 2 months there's a different sector that's peaking. So stick, and this is why you diversify, have multiple different sectors, have an index. This is why the index is important, like the Russell 2000.
2 of them.
S&P 500, because if you have all different sectors, you're not just in one particular sector, so you're diversifying. So I believe in tech. Tech's not going anywhere. Let's not blow it out of proportion, but it might be some short-term pain to come. So just be prepared for that.
Can you stand
And I'm
up?
not glorifying anybody that's cheating. It's none of my business if you're cheating.
You already know they're gonna come for you about it.
Yeah, stop. Y'all gotta stop.
The grass is not greener on the other side. Mow your own and water your own lawn.
Keep the grass cut,
please.
Be faithful to your positions, or you're taken to the cleaners.
That's a fact. So let's get some questions if we can. We haven't done this in a while, so we don't have a guest today, so we can answer some questions.
Yeah, let's do it. Jason Warner, we coming to you. Unmute yourself. You've been unmuted.
Jason, what's going on?
What's up, fellas? Can y'all hear me?
Yeah, how you feeling?
I'm doing good, man. I'm doing good. I just want to say shout out to y'all fellas for the game y'all give to the culture. We really appreciate it. I've been with y'all since story time, like way back.
Here's a little story
man,
there.
A super throwback. And Ian, thank you for the futures program because I have that on my Google calendar for probably the last few months. But I'll make it real quick. My question is, in episode 70, you talked about long-term wealth being 2 tech stocks and 2 funds.
2 index,
and not more than 20 picks because you're creating your own fund. So
Yep.
I kind of wanted more clarification on that.
If you have 2 index funds and 2 technology companies, you have exposure to everything else. The reason why I love indexes is because the drawdown is not that high. Everyone go look at the 2 most popular indexes, the 2 most popular mutual funds. Type in chat what the average drawdown on them per year is. You're not going to get an 85% drop on an index fund. It's safety. So that's my O-line if I'm Brady. 2 tech, great. I got Chad Ochocinco on his prime over here, Randy Moss over here, cool. Or Wes Welker, Gronk, I'm cool. So the indexes are my defense. Tech gives me acceleration. Everyone's talking about value and growth. The growth are the tech. The value plays are in the indexes. It's a safety. But also, if you only have a little bit of money, you can't have 45 positions and put $100 in each. I would rather go heavy on Apple, Tesla, Moderna last year, JP Morgan in 2008, and go heavy into the ones that I like. And I know you guys, ladies kill me for the analogies, but if I get 4 players, how Brooklyn is doing, I would rather pay 4 players top dollar than have 14 players that are terrible and pay them like a mid-level contract. I want to lean towards the ones that are going to do the best for me. Simple. Just keep 4 and life will be a hell of a lot easier. Or you can guys do what you want.
Appreciate you. Story time. That was epic. If you don't know what story time is, you got to go back to the archives, earn your leisure. That's when we was in the dining room.
You're not day one if you don't know story time.
Story time was epic.
But shout out to back to episode 70. Damn, I appreciate that. It felt like 5 years ago.
That was a year ago.
Yeah.
Wow.
It's crazy.
No, sir. We coming to you. Unmute yourself. You've been unmuted.
Hey guys, can you hear me?
Yes. How are you?
I'm good. What about you?
I'm good. Thank you for asking.
Thank you guys for that. I've been trying to get a question in for the past few weeks, but I appreciate it.
Break guidelines. I asked 2 real quick. Fire.
What'd you say?
Nothing.
Yeah, I saw the episode where you covered the 200-day moving average as well as the 72-day moving average. But for somebody that's just now getting into technical analysis,
yes,
and trying to get into charting, where do you suggest that we start? I also have a couple of books that you recommended, but where do you suggest we start for a beginner?
I would start with the price channel. It's way more fire. I promise you, way more fire. You won't have no losses. Please, better than 72. The thing I just told you about is Kobe Michael. 200-day, decent. Horace Grant. 72, not bad. But that price channel, and it's the last time I'm gonna say it too. That's how fire it is. Start there. What books you want to talk about real quick?
Let me see. I got a couple of them right here on my desktop.
Come on, Trent Rashad gonna kill me for breaking guidelines.
Yeah. My bad. I'm looking for. I got so many screenshots.
Okay, Market Wizards, Complete Turtle Traders, Trend Following by Michael Covell, Money Master the Game, Trading in the Zone by Mark Douglas, A Man for All Markets, Big Debt Crisis by Ray Dalio, Principles.
Can I add one, Ian?
Go ahead.
Stock Traders Almanac 2021.
Stop
When you want to find when you,
fire.
I mean, let's just help the people out. If you want to find the trend, you go get it. It's on Amazon. It's $59. It will tell you month by month, day by day, the trends of the market.
Troy, a good brother. I tell you, he's a good brother. Like stock market, and I'll say it too. I don't endorse many books. Fire.
You know, it was crazy because we got out at the same time. I was like, "What you reading?" I'm reading it too. Yeah. Fire. That's a good one.
Appreciate it.
And it'll tell you what the probability of the days for those of you that trade futures, it'll tell you the icon of which days have the probability of being down. Don't make a course in 3 weeks on it and act like y'all came up with it. Please don't do that. But yeah, that's fire. I love it.
Yeah, they put it in chat. Somebody asked to say it again. It's in chat. Stock Traders Almanac 2021. There's a 2020 version, but they obviously update it every year. That's amazing. A good one. No, so appreciate you.
That's a fact.
Appreciate you. Thank you.
Let's get some ladies on here.
This man just gave us the blueprint to how to make the Just Blaze sample at Rockefeller. I see you.
Well, I hope I can get this right. Miss Kenny, are you there? Sharasia? I hope I said that right. You unmuted. Unmute yourself. Sharasia? Hello?
Queen, you there?
She's saying no.
Trying to get some headphones together. I hear you.
I gotta get the mic right.
All right. 5-4.
I'm here.
She said, okay.
We can hear you.
Okay. So I wanted to ask, I know you guys
your volume is real low. Is there any way to speak low?
Okay. Let me turn it up. What about now?
Better.
Yeah. Okay.
Is that better? Okay.
Yep.
My bad. Thank you. It's Sharisa. Thank you. You got it right. And hello. Good evening to everybody. Hope you guys are glad you guys are doing well. Heard you tell you were doing well before. I had a question about energy sector. I know when Josh Brown was on, he talked about the energy sector. You have to look at companies into the next level of the energy sector. And so what does that look like? What does that next level look like? Because when the cold weather happened in Texas, they bashed clean energy. They bashed the windmill energy. And so why is the energy sector taking this turn? Is up, but they've kind of taken this turn in the upward direction. So can you give some insight on?
Yeah, energy. The antennas was a little crossed.
Yeah, the TV antenna.
Speaking of energy, yes. Remember back in the day, I don't know, my grandmother had the joint where you had to turn it down, and then like you had to play with the wires, and it was like it might be lines in the TV. It was a whole cultural.
If your brothers didn't like you, they told you to hold it because you got to stay there so we can get a clear channel.
Yeah,
that's what happens when you're younger.
Channel 2, Channel 4, Channel 5,
7,
and Channel 7,
9, and 11, and 13. That's what Mr. Rogers.
That was before cable. Ian, how do you feel about energy?
There is some value there right now. Anytime that anything related to short-term weather disasters, it's a good trade, not a good long-term investment. We're having a shift like a paradigm shift in what's important. So fossil fuels are going away. Cleaner energy is going to be the wave of the future. Some would argue that it is here now. If you're going to look at anything in the energy field, I would look at the big boys, but I can come back next week and probably tell you like the top 5 that I like, but I wouldn't base a long-term investment thesis based on short-term weather disasters that have happened in the state that I live in.
I have 2 that I'm thinking about jumping out of now. I'm just trying to map out my price point. Okay, FANG and ET. So Diamondback and Energy Transfer.
Okay.
So I got it Diamondback at 62.
Let me grab my phone real quick. I promise you I had these prices for you. You want to get in or out?
Out.
Diamondback's on a crazy run right now.
It is.
Diamondback's on a crazy.
Yeah, I'll probably take profit over the next couple of days on that one.
Okay.
But I'll come back for sure next week and answer that for you.
Because,
okay, and then I'm in Stock Club as well. So.
Oh, come on! You already know. Send me a telegram right now.
Okay.
And I got you.
Okay. Thank you. Appreciate you.
Definitely. Its 5-year chart doesn't look encouraging. 2-year chart doesn't look encouraging, but
The 6
The
month
6 month
great.
chart looks
Yeah.
impeccable.
Yeah, I actually
Profit.
I typed in FANG because I was looking at a FANG ETF. I remember I spoke to Trap like 6 months ago. There was a FANG ETF that had the top 10 top 10 companies. And I'm like, oh, you think we should invest in it? And he was like, nah, man, it's 50% chance if the FANGs go bad, then you lose your money. And so when I typed it in again, I ran into this. I'm like, ooh, I caught this like 2 months ago and I didn't. I heard something a very good perspective on energy. And it was like, clean energy is the wave. But when it comes to building, are we going to be having EV tractors? Are we there yet? Because if we got to build, if we got to create roads, we're still going to be using oil and gas to get us those vehicles to those.
Yeah.
Always keep that in.
Yeah, and they'll shift and make the adjustment. But give it time. But oil
down the road,
being a primary investment, that era is over. It's long gone. And shout out to Mr. Trapper. Man, them trousers you had on, boy, you look like a GQ model. Trap picture. Kudos to Mr. Trapper. Go trademark that ASAP.
Melissa, we coming to you. Unmute yourself. You've been unmuted. What's going on?
Hello.
Hey, how are you?
Hey.
I'm good. How are you?
Good.
Great.
I wanted to ask about space stocks.
Okay.
And what you thought about them.
That's what Mr.
Well, I was
Trapper
reading like an article recently on travel and leisure regarding space and hotels, and I have a hospitality background. So I was like, that sounds interesting. And then I'm reading Elon Musk's book and SpaceX and all that other stuff. So just wanted to get you guys' input.
It's going to take probably 20 years before it's like viable. But if you're willing to build an incredible base while the price is low and you believe in the space, now would be a good time.
Virgin Galactic, there's a few others, but
Virgin's overrated though.
It's still so much more that has to be done for it to be viable. Like, it's one thing to take somebody into space as a one-off, but to make it an ongoing thing, I think we're years away from that. So my whole thing with my philosophy with investing is I want to invest in something that is like happening now. Yeah. So like even like last year when we spoke about Moderna, that was something that was happening in the moment, like now, not like 10, 15 years out. So because there's too many variables that can happen like in between. Yeah. So that's just my own personal play. I just feel like there's more value stocks and more value industries right now that's actually doing stuff that's actually changing the world right now, as opposed to something that, it's definitely going to happen at some point, but maybe 15 years, maybe 20 years, maybe 10 years. That's kind of a long time to plan and something that's not really,
Yeah, I think I go with Ian with this. And I think you might have said it. You don't want to get into a position at the wrong time, in a sense where, yes, space exploration will be something of the future. Is it up right now? Probably not. And so I think the example you gave, Ian, was like 2010. If you would have invested in Tesla when everybody's talking EV, right? It was $5 then. It wasn't the time for EVs. You talk about Tesla now, obviously they're here. The cars are here. You see so many different EV companies. It's a different time. And so you don't want to get into your investment and just sit on it when you're going to be losing an opportunity to actually gain potential in other spots.
Yeah, unless you can hold for 15 years and you're doing it for your kids. Like if space is internet 2.0, 2024 space is like 1985 with internet.
Got it. Thank you, guys.
If you have the chutzpah to hold it for that period of time, great. But also too, when something is at an extreme low and you truly believe in it, and if you have an informational edge, there is value in building a base every year. And so for those who built up positions, like when Jason Calacanis and like that whole like Tesla support squad helped Elon stay afloat. There were people that were buying 20,000 shares of Tesla every year. And then when it finally had its boom, great. But you have to have an edge there to know when you're going to have liftoff, no pun intended, on that asset class.
Yeah, and then there's ETFs too. You got Moon, you got UFO, and ARC.
They're coming with it.
They're coming out with one.
Everybody's waiting on it. Everybody's waiting on it.
ARC is coming on one too. So
these ETFs, sometimes the names be hilarious. right? Like UFOs. I was looking up
It's good marketing.
Cybersecurity ETF hack. I'm like, that's perfect.
Good marketing.
Yeah, it's good marketing for the
Yeah.
ETF. That's dope.
What better space name than UFO?
Yeah.
Makes sense to me.
Paid a premium for that name, but it was worth it.
Real quick, our earnings. So kind of slow on the earnings from companies that we spoke about. So Thursday, DocuSign will be reporting, and Ulta Beauty, another company we spoke about that was solid. Those two companies will be reporting on Thursday. All right, let's see if we got some more ladies in here. Edith, we coming to you. Edith, what's going on? Unmute yourself. You've been unmuted.
Hi.
Hey.
Hey, how are you?
I'm always shocked when you all pick me. This is the second time. Ian is fire. I love the EYL Masters, Troy and Rashad. So I invested $100 in Bitcoin. It's now 700 plus. Should I take out 500 and buy another stock? Thank you. I love you all.
No.
Oh, leave it? Oh, thank you, Ian. Thank you.
Leave it.
Okay. Thank you so much.
Yeah.
That's a nice turnaround.
It's a nice return. Yeah. Keep it in.
That's a nice one.
She was listening. That's what I'm told. That's the application right there. Oh, this might be a first. Let's go to Rashad. Rashad, are you there? Unmute yourself. You've been unmuted. What's up, Rashad?
How y'all doing?
Good. How you feeling?
Good.
Hey, man, it's all love. I just want to congratulate y'all on a wonderful show. I'm listening every Monday. I'm EYL. I'm Red Panda now. It's going down.
My guy, I appreciate you. I love your energy.
Troy?
Real quick, Troy made a statement, and I just wanted to bring it to everybody's attention. I just saw this like today. There's footage right now on YouTube that just came up via drone. Elon he's been working on a semi trucks, EV semi trucks. I'm in Texas, so I'm hardcore Tesla. I'm hardcore, with the movement. Anyhow, my quick question was leverage. If any of you guys can explain on a fundamental level how we could possibly utilize leverage at a time like this where so many stocks are on sale.
Man.
Leverage. What exactly are you referring? Margin accounts?
Yeah, long term on buying holds. And I understand leverage can be a two-edged sword, but how can you utilize that leverage? Say, for instance, if you have X amount of dollars and you're leveraged more purchasing power if you have a stock that's on sale. And I'm asking this as a beginner because I've never used leverage before, so I definitely don't want to over leverage. But so much is on sale right now. I'm gonna make a move. I'm gonna buy some more, but I just want to know
how much are you trying to leverage?
No more than a couple grand at the most.
Email me Ian at joinredpanda.com. I'll send you the couple grand. I don't want you to use leverage. You're gonna kill your account.
Oh man.
Point blank. Gonna fuck up your account. Don't do it.
Peace of love.
Because if you don't know where to get in, when to get out. Okay, let me ask you this question.
Yeah.
For whatever you want to buy, how long would that asset class be down? Or that particular stock? Now there's a clear answer, because there is an extrapolation model based on algorithms and hedge funds.
Sure
You can see how long Tesla's gonna be down if you guys go dig for it. But if you don't know, I don't want you to leverage 3 or 4 grand and then you end up being down 26,000.
Peace.
Can happen.
Okay.
I want you to do it. Well, what's your name again?
Rashad.
Rashad, where you from?
I'm from Houston, man.
Man, come
listen,
meet me.
Bro. I don't listen. It's all love. I appreciate y'all, brothers, and I just want to let y'all know, man. The ancestors are smiling down on y'all, man. This is what brothers like Marcus Garvey wanted to see our people do, man. This is it. Freeing the land.
That's huge.
All right.
Peace,
man. Y'all have a good night, man.
Meet me in Sugar Land in 3 days.
Ian said, pull up on him at the skate rink.
What skating ring, man? It's H-Town, man. It's the 4th largest city in America, bro.
In the Simon Mall, they got a skate rink in there.
I'll be busting my ass in the gallery.
Hey, man, you ain't the only one, bro. I can't get down like that, man. But listen, bro, I appreciate y'all, man. I really appreciate y'all. I don't want the money, man. I just want to learn how to fish. You know what I'm saying?
Don't do leverage though. You have to wait 2 or 3 years And you have to have an edge that is so great. So the only time I want you guys to use margin is if you're winning 80% of your trades, and if you know that you're going to put in $1, you're going to get 7 back.
That's a bet. That's a bet.
That's it.
Thank y'all.
I appreciate you.
H-Town. Appreciate you, bro.
But definitely, I mean, yeah, to answer that question though, leverage,
Is
just be
the
careful.
devil.
Because everybody, I mean, we could tell people not to use it, but
when you see it, it's tough.
Yes, I mean, we've spoke about this a lot, so I don't want to go into too much detail, but margin, there's other ways, you know, credit, you can, especially in the crypto day, remember people, you used to be able to buy crypto with credit cards.
Credit cards,
My mom,
back in the day.
My mom reminded me because I couldn't use Visa. You had to have a MasterCard to do it. So I ran a park card real quick.
That was the good old days of crypto. Imagine if you could buy stocks with credit card.
No, it'd be
like you used to be able to buy crypto with credit cards. That's crazy. Looking back on it now.
How many credit cards did we take out?
Oh man, it was crazy. Crypto and credit was lit. That was a whole wave.
Yo,
I've seen even cash advances or balance transfers, because you know a lot of times people don't realize with balance transfers you can actually take out money a lot of times with the balance transfers, and then once you get that money you can do whatever you want with it, and then the balance transfer is like 0% for like 12 months, sometimes even 24 months if you get a real good offer. So that's like an interest-free loan for 24 months. But
yeah, don't do leverage.
I'm not encouraging.
He only talking because he lived. That's all.
Hope that. So hopefully you don't have to go through that.
That's a fact. Pop, what's going on? Chi-Town Zone. You unmute yourself. You've been unmuted.
Hey, what's going on, guys?
Hey, Pop, man, I appreciate you today in a major way.
No, I just want to know what you guys thought about Israel is IZRL. I bought into it like 31, I believe.
Say the ticker again.
That's the art thing, right? The Israel.
Yeah.
That's an art.
I haven't looked into it yet.
Israel.
So I
gotta look into it tonight for you.
I looked into it a while ago, and then like earlier on, and I mean, I like the companies that were in there. So I'm just thinking, like now that they're down a little bit, I'm thinking about just like kind of loading up a little bit on it.
Yeah.
I don't have my trust up right now, but I could get on it.
I'm definitely aware of that, but I haven't really looked into it, so I can't really speak on that. It's not something that I looked into, but I know it is part of the ARK family, that Israel ETF. But yeah, maybe we'll look into it.
Look at my phone real quick.
You should never speak about something that you're not educated on.
Okay, yeah, it's a technology. Okay.
Yeah, I'll come back for sure.
Get back to that though. Great question. Appreciate it.
I appreciate you. I wasn't aware of it, but I am now. So that means there goes the homework for me tonight. Appreciate you. Technology, I see. Innovative technology.
Yep.
All right, got you. Let's see who we got here.
Let's get like one more.
We got any ladies in here? Let's go to Jamie. Jamie. This could be unisex though. Jamie, it's you. You just
Hey, what's up, fellas? How y'all doing? Can you hear me?
Yes. How are you?
What's up,
yeah, I'm good. Hey, so speaking of margin, so I haven't blown up my account yet, but I did have about 2 million. I did have about 2 million, and then with the correction in the NASDAQ, I'm down like 900,000. So this is what I'm trying to figure out. So I liquidated my account. Yeah, I liquidated my account. But I'm trying to figure out what to do now. Should I play the reopening play, or should I just stay in cash? Should I take advantage of the dip, in these tech stocks? I mean, at this point, what should I do?
When you say liquidate your account,
what are you investing in?
Everything? Liquidated everything?
Yeah, I mean, honestly, man, I kind of panicked, so I sold everything. So from peak to trough, So from peak to trough, I was up about I turned about 100,000 into 1.9 million. It came down to about 1.25. Now I'm right at about 1.1. So really at that point, I just sold everything, and I just said, hey, I'm gonna wait this out. Let's see what happens.
So you started at 100.
Yeah.
You started with 100. You went up to 1.9, 1.2.
Yeah.
Okay, you're good.
So, but it feels bad though, right? Because yeah,
you can't count money that you never had.
It goes back to and then it goes to the point that I was talking about earlier. Commend yourself for a hell of a trade. What you're trying to do, and we all do it, You're trying to recreate the magic that you created last year. And this year is a different cycle.
You did the right thing.
So if you started with 100,
you did the right.
Yeah, you did the right thing. You're at 1.2. You need a cooling off period for 3 months.
You did the right thing. Go on vacation
before you deploy capital.
Think about it.
Yeah, man, because I've literally psyched myself out. I thought I knew what I was doing, but when that happened, I was like, okay, snap! I need to reassess, reevaluate.
Okay. You knew what you were doing.
Options?
Actually, no, man. It was just long. I was going long on stock, no options.
Investing. You deployed capital at the right time during a crisis. Great.
Pretty much.
Now we're not in a crisis. We hit at a high. Now we are going to chase those gains. All traders have been through this. You just went through it on a long-term investment cycle, right? So this is what I talked about earlier. Once you know what your targets are, you have to then stop. If victory is game 7, you can't be like, hey, let's play game 8 because you could lose. So now you're up. Wait till the market settles. I would even say you probably should wait until September until we have a strong pullback and then deploy capital. And out of that 1.2, I probably would only put another 100 to 200 grand in and let that ride for 10 to 20 years and you'll be good. Do not try and recreate what you did last year.
What stocks were you invested in?
At the time, so really I went all green. I was heavy green tech, the EVs, in anything that was mining Bitcoin, right? Okay. So I got in early, man, and that thing just kept going up, like every day. I was
up. In grayscale?
There were I had some grayscale. Yeah, I had GBTC, I had Clean Spark, I had a little fuel cell, little plug power.
You got out at the right time on everything.
Hey, Jamie, you did the right. Hold on, wait. I thought like I was gonna say like if you had Apple or Tesla or something like that.
I didn't fool with neither one of those.
Yeah. No. I'm saying is that it probably wouldn't have made sense. But you got kind of stocks where
you got out at the right time.
Tomorrow's not promised. And you got 1,000% return. You did the right thing. You did the right thing. But the thing about it is,
which I'll tell you guys all the time. Yeah, go ahead.
This is the thing though. You were fortunate, and like Ian said, that was actually something that was really true. It's a blessing to lose 400,000 or lose 900,000 because in order to lose 900,000, that means it up. So it's a blessing to even be in
up.
But it's a difference between having a good year and having a good career. So you could have picked some good stocks, but now it sounds like you might want to just formulate a strategy because there's no guarantee that you can duplicate that level of success.
You're not going to be able to duplicate that again until we hit another recession.
The thing is like when you have more money, like we know people that have 1,000% return, but they only had $1,000 in. But you had 1,000% return with 100,000, and it's like, all right, that's $1 million. Like, you know what I'm saying? So, but you don't want to continue losing because then you hurt yourself.
I'll just say this.
I know you don't want to hear this.
I'll just say this, Ian, and then you go. You don't have to apologize, man, for being a millionaire. Like you made the right play. They were over a year and a day the investment. So I know some people are asking about the taxes because I'm thinking about the taxes in my head as well. But
and I think that's why I held so long because I was like, man, I don't want to pay short-term capital gains on all these gains because I'll be in the AMT and all that. Yeah. But in hindsight, that should have been more secondary, not primary. But go ahead. I'm sorry.
No, I'm just saying congratulations, man.
Yeah, I mean, because you did a hell of a thing. But I know you're thinking, like, what if I could do this for 5 more years? Opportunity will come. I will only deploy maybe 100,000 because that's a number you probably can sleep with at night. If you lose it, you still have a nest egg, but now you got to lean towards safety. Now it's all about capital preservation. No one wants to hear that until they lose the 1.2. And then you were a has-been that had the 1.2 and lost it. But you can still print a good amount of money off that. But kudos to you. Like, we've got to clap it up for you. I know the anxiety is real. And when you guys make money, for those of you that are looking on YouTube and people in Zoom, you think that when you make the money, the problems go away. They only get exacerbated because now you have a different set of concerns to manage.
But you don't.
So the higher up you go up the mountain,
it doesn't feel like. It doesn't even feel. It's one of these things that's cliche, where it's like you have $1 million, and you would think the life changes, and you just not really that case. No, it's really not.
Yeah.
But
And that's why sometimes I'll say the thing, and people be like, you guys are crazy, but like the number for actually to be rich in America is like 31 million. There's a reason why top athletes that play in the league make $30 million a year. Go look at the stats. That is the metric. $1 million in 1970 was amazing. 1960 was amazing.
okay,
It's not the same, especially if you
as an advisor, definitely. Now I understand you didn't do the more safer plays because you was running it up. But now that you have some nice capital, put at least a couple $100,000 into more of the traditional investments that we talk about and these are type of things you can just hold for 20 years. But at least
Yeah, and you can get 15-20% on indexes if you get it at a great price.
That's a great percentage, right? 12-15%.
Yep. Until we have another crash.
Right. Yeah. Congrats.
Yeah. Great job. Like, I got to clap it up for you. That's huge. But the anxiety with it is real.
Start investing in the stock market.
Do what again?
When did you start investing in the stock market?
Like when did I first start?
Like,
probably like 2008.
This run with the
this run. Oh, with the 100,000. So I put that in
April,
like around June, July of last year.
Oh, you really killed it.
Yeah.
You really killed
So yeah,
it.
yeah, man. I mean, it felt good, but then I feel poor now because I'm like, man, I lost 50% of
Bro,
what I had in my account.
Listen, you're making an amount of money that most people on here may never touch. Don't say that you feel poor. I know what you mean.
He's a
Jamie's an earner.
He played great defense. Played amazing defense. You can't be mad at that. The house is on fire. You grab the fire extinguisher and put it out.
Yeah.
Job well done.
Hey, Jamie, we're giving you the stamp. Earned your leisure.
You have earned.
Has been earned.
That's huge.
Thanks, fellas, man. I listen to you guys every week, so I appreciate it.
I appreciate you, bro. Go to the
and it's a good lesson for investors and traders. No matter what amount of money you'll hit, you always have FOMO. It's always, man, I could have got 22% more, 28% more. It's always FOMO.
Yeah, 2,000%.
Gotta learn how to deal with it.
Because he said 1.9. So
he wanted probably 3,000. It never goes away.
But it does hurt.
Take care of the grass that you're on.
$500,000. It doesn't feel good.
No.
Doesn't feel good at all.
There's no way to substitute that feeling. Like, you can't explain it to somebody. They'd have to go through it to understand it. It's like one of those things.
But it's not that bad. It's really not.
You took a trade and you just start crying out the corner of your eye and down here at the same time.
You know what though? Because nah. It's really not. I look at it like when you up, right? And it's like that you had some crazy run up. It's like the money's not really.
It's unrealized.
It's not realized.
Yeah, that's why it's unrealized money.
Keyword real inside of realized. It's like you never win, you never lose in this game. Like you up, you down.
It's a roller coaster.
It's different in futures because it's cash settled the same day.
Okay.
So when you lose 90,000 in futures, it's 90 that day, and a broker won't call you and say, "Hey man, hope you have a better day tomorrow." You just cry. Like Trucking Boys in the Hood.
I looked at my account last week, bro. I saw how much money I lost.
And how much was unrealized?
Listen, the group chat been quiet 2 weeks. I'm like, hey, I get it. Don't open it to April. Yep. It feels just like last year, though.
I'm in the kitchen. That's all. I'm in the kitchen. Cooking.
Wins and losses, man. You can't lose when you started with nothing.
That's a fact. It's only up.
You can go back to
that's a fact.
That's the ultimate loss for me. That's the ghost I'm chasing.
You ain't never going back.
Oh, you can never go back.
NBA
young boy.
Never broke again.
Never broke again.
Never broke again.
Never
That's
broke.
true.
We made an oath to each other. Never broke again. I don't care.
Never broke again.
It's been real. It's been real. Always enjoyable.
Always
enjoyable.
Market Mondays, man. Always, it's therapeutic for me. I love the Market Mondays, man. Every Monday, 8:00, we get to rock out for 2 hours.
Our ZRL is not bad at $20.19. By the way, if it gets there.
Yeah, man. It could always be worse, man. We gotta keep life in perspective. You're really blessed. Like Fat Joe said, man, when you can wake up and, as he said, eat lobster for breakfast and things, that we're really blessed. And it's like, where we can just, have a YouTube show and talk about stocks and, talking about losing money and still have a roof over our head and still be able to drive
That's
nice
true.
cars and that nature. It's
Yep.
like, you're really blessed. It's important to keep that in perspective. At the end of the day, it's only money. Your wealth, your family,
Your health.
your family, your real wealth is in your family and your health, and your peace of mind.
Yeah.
And you can't put a price tag on peace of mind. I look at money not so much as like just that, hoard it. It just allows you to do things and allows you freedom.
Certain freedoms.
But we always got to keep.
But put governors on and stop losses on y'all account though. Too.
Ian,
Because
he's not going.
that sound guarantee.
No, I respect that. I respect that. And learn too. Learn from your mistakes, because we all make mistakes. But yeah. Once you keep that in perspective, you realize that no matter how much you lose, no matter how much you gain, it's a blessing just to even be able to play the game.
Yeah, that's a fact.
What number would you lose? You don't have to say it, but percentage wise, if you lost it, you would actually cry.
No, I wouldn't cry, bro.
Nah, there's no percentage.
I wouldn't cry.
You wouldn't cry?
Nah, I wouldn't cry. I wouldn't cry. If I lost 100% of my
portfolio, different thing.
It would hurt, but I wouldn't cry.
Yeah. Now we remove emotion from this.
Yeah, it happens.
Yeah. We really from nothing. Like, I don't think people really understand. We say we've started from nothing. Like, we really did.
Yeah, I get it.
So it's, you know what I mean? It's not for us to
not much has really changed. Like, it's not like our life has really drastically changed. Like, it's like, if worse
I was
comes to worse, you
quarantining
can always just go back.
Yeah.
I could always just go peanut butter sandwiches and tuna fish.
Coming over every day.
Could always be worse.
Is Notre Dame independent or?
Yo,
when y'all gonna get y'all sports talk off? That segment alone, man.
We should drop the sports podcast.
Viral.
Sports podcast.
Y'all debating what y'all do? Listen,
we need a moderator.
Sports podcast.
Shout out to Brian. Brian could be the moderator.
Music and sports podcast.
That's too easy.
Yeah.
Yeah. We can do that right.
You want to take one more wrap up?
Yeah, we can take one more.
Let's see. Let's see what we got.
But I'm not planning on losing 100% of my portfolio though. If that happens, that would be a dark day in American history.
Never seen this name. Let's go to this one. Is it Daryl? Daryl, what's going on? Unmute yourself. You've been unmuted.
Yes, sir. How's it going, fellas?
Good.
How you feeling?
Good. I'm calling for some quick guidance or whatever. 49-year-old cat, started investing last year, right before the Apple split. I'm investing $1,000 a week. I'm trying to do that for the next 5 to 10 years to catch up on everything. I'm doing DCA right now, but after this drop or whatever, I was deciding, should I stick with the DCA? Should I split it up, DCA, and load the boat? What would you suggest?
What are you investing in?
I was
Apple, Microsoft, AMD, Visa, VTI, QQQ.
You're good, man.
Good, man.
Like, go look at the Cuban episode.
Yeah, I'm gonna have to
give you some sharp
I'm gonna have to go back to that Cuban. I was the one for that as well. So I just started like
you won't. You'll be good.
What
there
you get in at QQQ?
Would I get in at?
Buys every week.
Oh, he's buying. Okay.
Every week.
Okay. I thought he's putting $1,000 in there. Okay.
$1,000 every week. I'm not
smart. That's a good base.
Averaging. Just don't be discouraged. I know you're down on your portfolio right now, but don't be discouraged. Dollar cost averaging is the best way to actually invest. It's been proven.
Yeah.
Yeah, because I made some of the mistakes that y'all mentioned before. I started straying off the path, didn't stick with the plan. First, I was doing dividend stocks, and then I started doing the DCA. And then I heard Troy say on one episode he wanted 1,000 Apple. Now I want 1,000 Apple. So it's kind of going back and forth. So, but yeah, I'm gonna try to stick with the plan.
Stick with your plan through and through. That'll give you your greatest edge. I'm gonna be honestly, as an investor, when I hear other people want to stick to their plan, I'm like, this shit gonna be an easy win for me. If you just stick to your plan and just dollar, like if you're putting in 1,000 a month, oh baby,
1,000 a week.
A week.
1,000 a month.
2024 is gonna be amazing for you.
There's a lot of earnings out here getting money.
Yeah,
how much? Thank you. I appreciate you, bro.
Appreciate you, Daryl.
How much of your portfolio would you lose before you started crying?
Shit, if I got down to 55%, boy, I'm gonna come on here like, oh my God, you're gonna see a whole different side of me.
You'll pull the pocket square out.
I'm the hedge king. I'm gonna lie. Yeah, man. You're gonna see Leroy come out for real.
We haven't seen him in a while. This must have been going good. Yeah, Leroy
he still died. He dead from Hurts. Gotta dig him up. Hurts put him in the ground.
You know, that was
it happens.
Classic character. Yeah,
Snapchat, bring it back so I can run my character up, please. Thank you. Yeah, but I've had losses big enough in trading. Like first time I lost 30 grand in the trade. Oh man, I cried and didn't know I was crying.
Yeah, I never cried.
Not fun, but it taught me all the lessons.
Even when I lost 30 in life.
Oh, like what are you talking about?
Well,
investing
a few times in life, but even when I lost that 30,000 in crypto, when I couldn't afford to lose 30,000, it was like Tweety Bird. Like you ever watch those cartoons where it was like the Tweety Birds? It was like that. Like
but at least in crypto, you have time for it to recover. Like end of day 259 futures.
No recovery for that.
It was we watched things go to
you guys just flat out
99% red.
99%. Like I literally felt like somebody hit me in the back of the head with a sledgehammer. Like
no, it was real. It was real.
Yeah.
What happened?
Yeah. And that's the point. And then we just next day. That's why they're like
there's great lessons in it.
I'm honestly not capping, bro. I already lost everything. I lost all my money I invested at one point in time. I lost it.
You'll be down.
I got it back within a year and like 50 times over that. It's like, so I'm really serious. Like if I lose every dollar today, like I know how to make money. Like I'm not going to kill myself over losing money. It's a loss. I'll learn from it. I'm not going to be an idiot and not learn. But I'm not going to what am I supposed to do if I lose it? Like, it's lost. What can you do?
The further you get away from zero, the less it hurts, right? So like and that's the thing, like we'll start with no money and invest $1,000. And if that we lose that, we're not that far from being where we started, right? That's close to zero. The further you go up, those losses feel the same. Like you said, it's unrealized and it feels like it's unrealized because you've never touched it, right? If you were up 500,000, if you were up $1 million and you didn't take it out, like you didn't take, like what my man Dow Freeman said, if you didn't take the chips off the table, it never really was yours. It was unrealized. Your account said it, but it doesn't, the feeling's just different. It's just different.
Yeah, but also there's no such thing as house money either. That's
true.
An axiom the brokers come up with to tell you, like, oh, it's house money. Go ahead, just keep playing. And it's like, that's for them to make money on the spread.
Right.
But psychologically, you still, I don't know. For me, it's different. It's just like, I don't know. It's a different feeling. Like when you have that money and you're just making that money, like, and it's just like going up 1,000%. You lose 10,000 of that, it doesn't feel the same. Like when if I lost $10,000 years ago, that I had to go to a job and
it would have been everything, right?
Like
that's a problem.
It would be
how do you explain that?
American Sniper. Like, you know what I'm saying? Like, but now it's like if you paid 100,000 in the stock market, you lose 10,000. Don't really think about it too much.
That's in the normal range of risk.
Yeah. We lost 50,000 a day, honey. Huh? What?
Good luck. Good luck with that.
Yeah. Traders try not to risk more than 1.6% on any trade. And then also that point that you brought up about nature, for my traders, here's a quick tip for you. It's going to take you a while. Go look and find out what the average speed of an avalanche is. That'll tell you what your target price should be for the Dow NASDAQ when you short. That's how I got my targets for shorting. Avalanches are going to move at a certain speed in comparison. It's going to give you a multiple at which it moves faster. That is the same target. So take your normal target, multiply that times that rate of speed of the avalanche. And on NASDAQ, you'll be able to make a killing. So it's my little nerd bio homework for you. For the day.
Market Mondays, another epic episode. Thank you guys for joining us. Don't forget tomorrow, Credit Dude, Jose Rodriguez, episode 125.
Yep.
Wow, that's great. 125 of Earn Your Leisure. He breaks down everything you need to know about credit, business credit, personal credit, how to build your kids' credit episode. So make sure you check that out. Very, 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 very important information. 5 o'clock Eastern Standard Time on all audio platforms and YouTube. And we have a class from Titalia on EYL University on Wednesday. And she's the last time
different.
she spoke, she taught about investing in Ghana, and that was an epic class.
Yeah.
So make sure you check that out. Make sure.
Hey, how brilliant she is. She is, like, talking to her. She was, she had a job on Wall Street at like 16, 17 years old. Like, she's different. I didn't even know that.
Wow.
I mean, I think real estate, but she's a seasoned investor as well. So she's going to bring tons of knowledge. Shout out to her.
Yeah. So yeah, EYLUniversity.com. 70% off. Make sure you join. And yeah, man, keep it coming. Keep the suggestions coming. Who you want to see on, what topics you want us to cover. I think this year we've been covering a lot of different topics that we didn't cover last year. Real estate, several different times. Cryptocurrency, several different times. It wouldn't be a bad idea to have a credit conversation either, I don't think. Taxes, all that stuff. So yeah, we keep pushing Market Mondays as hard as we possibly can. So thank you for your support. Tell a friend to tell a friend. And
like, stimulus check. It's on the way. It's on the way. I think tomorrow they're signing it, $1,400 for, I think you have to make under like 80,000 though. And they did a survey. They said half of the millennials who are getting the check are going to be investing in the market.
Yeah, everybody's investing in the stock market right now. So
that's dope.
Shout out to everybody that's out there that's investing in the market, man. It's encouraging to see. And keep your composure. Do not panic. Please do not panic. And every storm ends eventually. Ian, what would you like to tell the people?
I appreciate y'all. As soon as we hop off here, we're going to do Trading After Dark. We're going to go through 20 charts, and I'll take 5 questions and wrap up. For those of you who want the futures program, it's available if you go to my IG link in bio for $1. No upsell, no downsell, no side sell. So we'll do that, and then I love y'all. That's it.
Yeah, and
have fun. If you guys like tonight's show, type in the comments, and we'll do more of that.
Oh, EYL Network too. We have the biggest stock show. We will have the biggest real estate show. That is, we're finalizing this situation. We can't speak on it too much right now, but we will have the biggest real estate podcast. We're coming for bigger pockets. That will be soon.
Very soon.
Real estate podcast is on the way.
Soon come. Hey, and everybody, I seen it in the chat. Shout out to Jesse for reminding me. I actually put in my notes. We talked about Roblox because our kids play it all the time, and they probably, well, hopefully they're sleeping now, but they play it every night. The IPO is this week on Wednesday. The IPOing. So any parents, you already know you probably paid enough for whatever the share is going to be over the past 6 months. So good time to invest in that if you're interested in the company.
And another one of our friends is interested in joining the network too. The biggest. It's called the biggest in the game. I can't even speak on that yet. But
hold your poker cards to your chest, my friend. Hold your poker cards to your chest.
Oh, the network is.
And when Coinbase IPOs, I'm elated about Coinbase. I'll say that.
That's a good one. All right, guys.
Yeah, man. Oh, shout out to all my educators. I see my new row famous in here. They texted me. Her, what's up, Thomas? What's going on? All my educators, love you, appreciate you. I am you. I fight for you. My old principal called me today.
Dope.
Wants me to come back to speak to the kids. He actually gave me my first job. So shout out to Mackenzie if he's watching. But yeah, keep fighting the fight and keep educating, man. We had a great conversation about indoctrination versus education. I always bring that up a lot. And Jason actually changed my mind on it. He said indoctrination is good if we change the doctrine. And so all my educators, change the doctrine. If you know the truth about education, what you should be teaching, don't feel discouraged about teaching the truth. Please don't. Our kids' lives are on the line. Please teach the truth. So I'll leave you with that.
Goat fuel. a much finer energy drink. Shout out to Jerry Rice, the greatest of all time.
Goat fuel. From one goat to the next. It's called the biggest.
It's called the GOAT.
Yo, we love y'all.